Good afternoon, everyone, and thank you for joining us for today's live Q&A session on Paycheck Protection Program Loan Forgiveness. My name is Shannon, and I'm part of Fundera's webinar team. Today, I'm joined alongside Fundera's PPP Loan Forgiveness expert and Senior Director of Finance, Justin Ridgely. Justin is here to provide any relevant updates to the program, as well as answer any questions you have about getting your loan forgiven. During the Q&A portion, we'll start with questions submitted ahead of time in the Google form, but please remember you can always submit questions live using the Zoom Q&A box. The last thing I want to cover before we get started is that, as always, we'll send today's webinar recording, the slides, and any additional resources about PPP loans in a follow-up email. With that said, I'm going to hand things over to Justin Ridgely, Fundera's PPP loan forgiveness expert.
Thanks, Shannon. So I'm going to start today with an update, as there have been a couple of things that have happened in the program and around legislation since the last webinar. The first one is on the 23rd, there was some additional guidance released to lenders from the SBA that basically provided a lot of details about how the forgiveness back-end process is going to work, and how those lenders can work with the SBA's new system they created for processing forgiveness applications. For those that are have been following this closely, there's a system called eTran that was used for the application process and has was pre-existing and already used by the SBA, but there was no digital kind of back end for the forgiveness process, so that has been newly created. The main thing about this, though, is that this system is not open yet to even accept applications till August 10th. So even if you could apply for your lender right now, or through your lender right now, the lender will be sitting on that application till August 10th, at which time then it can be transmitted to the SBA. So just wanted to throw that out there because it is helpful to understand what the actual timelines that are happening in the background. The larger news yesterday that came out was, there have been discussions in Congress about an additional, round of legislation that would target, maybe making changes to the existing PPP program, which remains open through August 8th, as well as possibly creating a second PPP program, which would allow business owners to take second loans through the PPP program, as well as other economic measures like additional low-cost loans, and also some rules around forgiveness. So I have a couple of links here on this slide that we'll send around this deck, but these links are both to Marco Rubio's office. So if you're curious, in the meantime, you can check these out at their kind of press release section. But essentially, it makes a couple of, or suggests a couple of, pretty remarkable or noteworthy changes. And I want to emphasize that, just like with the CARES Act and subsequent guidance, and in the PPP Flexibility Act that happened, I do not anticipate that this will be the substance of the final bill that's passed, or really have any idea as to when that will be. I mean, hopefully sooner rather than later, but this is kind of the initial proposal from Senate Republicans, and there'll obviously be negotiations with Democrats, and then it'll have to be passed by both houses and then signed by the president. So I'm unfortunately not holding my breath on when this might be able to get done, but there are some encouraging provisions. One of those, specifically around forgiveness, is there is a proposal that for any loan that's less than $150,000 in size, the forgiveness application itself will be replaced by a simple attestation signed by the borrower that says, yes, I've used these funds as dictated by the guidance in the law, and I'm certifying that I'm eligible for 100% forgiveness. That would obviously ease the burden on many people who took these smaller loans, which loans that are lower than this size make up around 85% of all PPP loans that have been taken to date. So this would impact the vast majority of borrowers, and would be a very encouraging step to reduce the the overhead and complication of applying for forgiveness. The language, we'll see how this turns out, how whether you actually even have to compute whether or not you reduce headcount, or if it's literally just you say, okay, these are automatically forgiven. We're not totally sure yet, but it does kind of look like that it's moving towards turning every loan south of 150K into an automatically forgiven grant. But again, we'll see the final language as it comes out. There's also, if for those borrowers who have loans that are larger than that, or depending if that doesn't quite come out at that first provision doesn't come out in the law, then there were some other suggestions about adding additional expense categories as forgivable. I listed a few here: supplier cost, covered PPP, or excuse me, PPE, personal protective equipment purchases, things like that. If you're outfitting your business to operate, due to social distancing or other protective measures, those things would be covered. And then the third bullet here is it provides another 190 billion for another round of PPP, which would be a second loan potentially. And the universe of businesses this applies to in this proposal is those that have under 300 employees and those that can prove they've experienced a 50% drop in gross revenue. I think that the 50% and the 300 employee cap are both provisions that the business community and their lobbyists and trade groups have already seized upon in the past 24 hours as provisions that they'll go after to increase 300 to a higher number, and then also decrease the 50% threshold to maybe bump this up to only 20 or 30% or something around that mark, where there's a lot of businesses who have lost 35% in revenue, and 50% is a pretty massive drop. And I think there's a lot of desire to see this provision cover more businesses, so more businesses could get a second round of PPP, especially those smaller businesses that really need the funds and aren't able to access other types of capital. There's also a few other separate kind of pots of money here. I mentioned one, which is $25 billion set aside for entities with 10 or fewer employees, and then $10 billion set aside for community lenders. There's also a couple more of these. There's also provisions about expanding SBA 7A loans, making these new 20-year low interest loans, which, if you've taken out previous debt before or are interested in a longer term loan, you can kind of access this as well. So encouraging steps here. My personal view is I wish that this had come a few weeks ago or even a month ago, and I'm not holding my breath about how fast this gets done, but it seems like it's a pretty good bet that there will be some form of second loan PPP coming down the pike here in the next few weeks, hopefully. So with that, Shannon, we can hop into questions, but I think for those that are interested in this, try to follow the news on it. Politico has a lot of good coverage. Some other news outlets pick it up, but it's something that's worth watching, especially if you're planning for forgiveness. The provision around not having a forgiveness application if your loan's less than 150K is a pretty substantial development and would change the calculus here significantly, as well as planning for the future if you can get a second PPP loan. So this time I'll actually stop talking and let Shannon ask the questions.
Great, thanks for going over those updates, Justin. So now we'll go ahead and get started with the Q&A. As a reminder for everyone tuning in, you can submit your questions using the Q&A Zoom box, but we'll go ahead and get started with questions that were submitted previously. So the first question we have is about how to apply for forgiveness. This question is, if I received a PPP loan from a bank through a fintech company, who is the lender that I will need to apply for forgiveness with? Do I apply with the fintech company or the bank?
Excuse me, I was on mute. So I can't speak for every fintech company, but I can say that my strong view is that go with your bank, the lender who lent the money to you. Meaning, if you went through Fundera as an example of this, where we served as kind of a marketplace or an aggregator for a number of different banks that were doing PPP and helped them process the applications on the front end. We won't be able to submit forgiveness applications to the SBA on the back end, and the lender who you had your loan agreement with and received the funds from will be the entity that will process your forgiveness application. From what I understand, some banks and lenders have proactively reached out to those who took PPP from them and kind of set expectations on when this is going to happen. Maybe some have not, but I would expect to hear more about this from your lender. But also, just to reiterate one thing I said at the beginning is that forgiveness is not technically even live with the SBA until August 10th, and we have ongoing legislation that could impact that, where the SBA said this August 10th date may get pushed back depending on if they're if the Senate and the House are about to pass a bill that's going to completely change the process. I could definitely see them, postponing the 10th to get clarity on what's actually happening, because it doesn't make a ton of sense to launch this new forgiveness portal on the 10th when on the 17th or something, the forgiveness requirement gets eliminated for 85% of the borrowers. So I would stay tuned on that. I don't think we're at the place where many banks are actually taking forgiveness applications because they can't submit them anyway.
As a follow-up question, this person does want to know how to understand if they should apply for the easy application form. I know that you said this might have new rules pending legislation. We do have a guide to this that I'll drop in the chat as well.
The easy application is for borrowers that really didn't make headcount changes. Again, the way I understand this is you cannot go submit, download this application, fill it out yourself and submit it. You have to be submitted through your bank that gave you the money. And from the conference calls I've been on with a bunch of these banks, their view is very much that the easy and the regular don't really mean much to them, and they're designing an online application experience that will just take the data from you that it needs and submit the application on the back end per the SBA's format. It'll be all the same data and questions, but it'll be kind of an abstraction layer whereby you'll probably see a series of screens asking you for different documents and information, much like the application process, but that the output on the back end technically it's going to be easier normal app will be, you probably won't really have a choice there. The application through the lender will probably just select which one is best for you based on the information provided, and then it will submit that on your behalf, which is how the process is supposed to work.
The next question we have is about maintaining staff headcount. This small business owner asks, we will be running out of funding in the first week of August. If we maintain staffing throughout the covered period but cannot maintain it in the final week, will we be penalized? We were planning to retain staff through the end of July.
So there's been a little bit of clarification on this point. In previous webinars, what I've said is, if you're in a situation where you have a 24-week covered period, but by week 16, in this example, maybe we'll just use that as a straw man. By week 16, you're out of funds, and you know that if you reduce headcount, you'll be, dinged and not get 100% forgiveness. And what I've said is, you can apply for forgiveness as soon as your funds are depleted. And the question always was, well, okay, so if I haven't reduced headcount, I apply early, so to speak, at 16 weeks. If I make headcount changes directly after that period, what's going to happen? And so the SBA has what they said basically is not the most clear, but what they basically said was, you can do this, you can submit early, but the borrower's loan forgiveness application must account for any salary reductions in excess of 25% for the full covered period. So what this doesn't say is that you have to maintain the same amount of heads for the full covered period. So by deductive reasoning or reductive reasoning, we can deduce that if you do apply, say, for a 16-week period, you made no headcount changes in that period, you ran out of money then, and you applied under that 16-week date range, and then afterward you had to lay off somebody, that you wouldn't be penalized, but it does specifically list that you could be penalized if you do that greater than 25% salary reduction, which has been introduced in the forgiveness application. I think we'll wait and see what happens with this one as applications start and if this process gets changed. But for now, you still theoretically should be able to get full forgiveness using a shorter period of, where you end your covered period essentially as soon as your funds are depleted.
Next up, we have a question from a sole proprietor, and they say, can I pay myself for the full 2 months that my business had no income when the loan is dispersed to me, Or must I prorate payments to myself according to 1/52nd per week of my 2019 profit?
It's a good question. There's no specific guidance from the SBA on this. They have the rules which this kind of apply to this, or they have said, bonuses are allowed. They have not said that you have to pay on a schedule. However, I think if you were thinking that, you could pay yourself all of the money up front and then apply for forgiveness a week later, I think that would be, I don't know for sure, but I think that might be looked down upon. I think, the better, um, maybe if you think about it this way, is if you have transferred the money all into your personal account, you could still submit a document at the end of for your covered period with your application that supports, say these are the equivalent payments, but this money was already in my personal account, so I can't, make these payments specifically to myself on the schedule, but this is how they would have been divided up across, the 2.5 month period. I think that's probably fine, but I think you'll still have to play out that time frame over the forgiveness, covered period. Like I don't think you'll be able to apply for forgiveness on a shorter than 2.5 month period because you paid yourself a lump sum up front. So a little bit unclear there. I do think for most people that are sole props, the money probably just went in your personal account and the cash is there. And it's more of how you present this from a record keeping perspective when you apply for forgiveness.
Our next question comes from a small business owner who says, if my loan was disbursed on May 28th, can I use an alternate payroll for owner replacement income? I want the covered period to begin on June 25th. My goal is to delay the covered period in order to increase the amount of time I would be eligible for PUA prior to this loan disbursement date. Or must the covered period begin on the loan disbursement date?
So the alternate covered period works a little bit like that, but not as far as this person is asking the question. So if you got it on May 28th, you can either start your covered period on May 28th, or you, for the alternate covered period, assuming that alternate covered period assumes you have to do either, a 2-week payroll cycle or a 1-week payroll cycle, or more frequent than that. You can kind of start it on the next payroll cycle start by calendar kind of convention. So if you got the loan on May 28th, you can either start on May 28th or you can start on June 1st, but you can't start on June 25th. And the reason for that is you can't even start on June 15th because that's already more than 2 weeks after May 28th. And the law specifically talks about, you have to basically use a 2-week cycle or less. So, theoretically, if you had some sort of payroll cycle that you got paid like the 7th and the 21st, or something like that, you could use that and maybe start at like June 7th or 8th or something. But I think that the more simple way, the common way to do it would be if, you could start either on May 28th in that case or June 1st. But prolonging it almost a month later is not allowed.
Great. We're going to move on to some questions that have been submitted live. And the first question is from someone who says that they have an income now and they want to know if they can still pay themselves $17.50 a week for the next 6 weeks if they are a Schedule C tax filer and they were given a $14,500 PPP loan.
Yes, the PPP loan, is not dependent on what income you earn. So, if you're a sole proprietor and this is essentially an income replacement for you based on what you earned in 2019, you are still allowed to take that money and pay yourself as if, it doesn't matter what income you have coming in otherwise. I mean, so you could see where there are some scenarios where people are probably doing quite well under this, where, they got a loan and also then are still making money and still can get it forgiven. And that's fine. If you're a larger business, the same thing works where, you submitted for this loan and can show that you used it on forgivable expenses. but you don't have to, prove that you didn't earn income. I think that's going to change in the next round, where you are going to have to demonstrate that you had a reduction in revenue. But for this question, it's kind of irrelevant for what you're earning, and you can just think of it as still paying yourself that 14,500 divided up into 2.5 months essentially.
Next, we have a question submitted live from someone who would like to know, does it matter what day you do your payroll for weekly payroll?
No, there's no stipulation on what day that you'll have to, you don't have to have a set schedule.
The next question is from someone who says that we have covered their question, but she doesn't think she asked it well, so she'd just like to clarify. She says that they will run out of funds around Friday, 8/7. If we lay off employees at the end of this week, so 1 week early, will that impact our forgiveness if we have maintained the staff this whole time except for 1 week?
It will. It will. If the thing is, the way this works is, if you maintain it throughout your covered period or throughout the time of your funds, being spent, and you finish that period, then you're not subject to any penalty. It's that you've maintained your payroll through this time. The Payroll Protection Program has protected payroll. That's good to go. If you reduce the full-time equivalent employees, just before the end of that period, whether it's when you run out of funds or the actual end of your 24 weeks or something, then you will be kind of placed in this situation where you have to compare your average headcount during your covered period to the average headcount of either January through February of 2020 or February 15th to June 16th or June 15th of 2019. So it's like, if you maintain it, you won't be subjected to a test. If you don't, even by that 1 week, because you don't finish the period with the same employees you started with, then you will be subjected to this test, which, if you've had in the reference period, say in January through February of this year, you average 10 employees, and then you have 10 employees up to the last week, and then you have 8 employees, that will result in a very small reduction, because the amount of time, that's average, that 8 averages in, will be very small. You might, get 98% forgiveness or something like that. But it will put you in that situation where that has to be calculated versus just, maintaining your employee full-time employee headcount until either your funds are depleted or you finish your covered period.
The next question we have was just submitted live, and it says, do Schedule C tax filers have to keep track of paying themselves? My tax accountant said it was not necessary.
Your tax accountant may be right. I mean, I think, before on these webinars, I've advised people to try to keep some record of this, whether you have to kind of create a record to do so. I don't know if that's going to be totally necessary, but it is this slightly safer route. I do think, you don't necessarily have to do it now, and when you go to apply for forgiveness, see what the requirements are, and then you can kind of, make your paperwork fit that. But theoretically, you would have to prove that you paid yourself this money, however you do that. So kind of a TBD on that one. I think it's better safe than sorry. But again, there are rules or this proposal in Congress where this may just go away for people with small loans completely, in which case you definitely wouldn't have to do it.
Great. It looks like we have one more question that has been submitted live. And this is from someone who looks like maybe they missed the first part and they just want to recap on whether if there was a second round of PPP, would those who received funds from the first time be able to reapply? And we did get another question from someone asking if they have applied for a loan and received it, can they also reapply again now?
You can't reapply. I get the last question. You cannot reapply now. This would have to be passed you know, in this new bill, to get that money available to you if you already have your PPP loan. And then, you know, to the first question about hearing another round of PPP, yes, this has been suggested by Marco Rubio, launched this proposal yesterday from the Republicans in the Senate. There is 190 billion allotted, plus some other special buckets with 10 or 25 billion here and there with specific criteria. But there is this program that would be a second round of PPP. Right now, the suggestion is that it be for employers with 300 employees or less, and that have experienced a 50% drop in revenue. I don't know what period that yet would compare against. Also, I doubt that 50% stays at 50%. Hopefully, it'll get reduced. So the goal again here is to get, you know, businesses that have been severely impacted, more money so they can continue operating, you know, especially since they want to target businesses that are still having a lot of issues and really reduced revenue. But again, we'll see what the final bill turns out as.
Great. It looks like that's all the questions that we have for today, but we look forward to seeing everybody for the next session. If you have any questions in the meantime, please submit them in the Google form. We'll send that in a follow-up email today. And you can always reach us at webinars@fundera.com if you have any questions in the meantime. Thanks again for joining us, everybody, and we look forward to seeing you again soon.